I'm going to ask everyone to just give the briefest of introductions on how you're involved in the exchange ecosystem.
Sure.
So should we start with you?
Okay, sure. We started Bitcoin Indonesia in 2014. It's been 4 years, and then we changed the name to INDODAX. Now we're building Tokenomy, which is all crypto exchange based in Singapore.
Yep. And we are a Covesting cryptocurrency trading platform. We're based here in Gibraltar. We just finished our ICO last year. And we're building the full infrastructure for investors and traders and bringing best practices from the traditional financial markets, as the core team members are coming from Saxo Bank. Maybe some of you know, it's one of the largest brokerages in Europe. And we try to implement what we know best from the financial markets.
I'm Mikko from TokenMarket. We are mostly known for our ICO business, but we are also now working on a decentralized compliant exchange for app coins and security tokens. And we are also based here in Gibraltar.
My name is Jon Matonis. I'm investor and board director for digital currency exchange Globitex, and we are based in Riga, Latvia. We're also supporting Bitcoin Euro, Bitcoin Cash Euro trading pair, soon to announce other trading pairs, but we're also supporting margin trading and futures and options trading to come soon. But more importantly, we're rolling out what Simon mentioned in his talk about direct market making for Bitcoin versus commodities like Bitcoin gold or Bitcoin crude oil, Bitcoin soybeans, which is a critical next step for building a digital currency global economy.
Okay, so the headline has never stopped since I first got involved in Bitcoin. Exchange gets hacked. I think the last one was BitThumb in Korea, and there was one in Italy, there was one in Japan, CoinCheck. I personally lost money in Global Bitcoin Stock Exchange. Do you remember that one in the UK?
Yep.
GBX something, GBEX or something. Bitcoinica, Mt. Gox, until I learned that you need to get a hardware wallet and stop leaving money at the exchange. How is this custody problem going to be solved? And what is the future of exchanges holding money? And are they ever going to stop getting hacked? Let's walk along.
Sure. I think it's fortunate that our exchange hasn't been hacked yet. We can't know what's going on in the future. The thing is, over the past, we've been growing very stably. We don't want to be too aggressive because security is something that you may compromise if you want to grow too aggressively. You have to, all of a sudden, you have those hundreds of coins on your exchange, and all of a sudden, how do you manage the security? That can be an issue. For us, we just want to make sure that we have a large percentage of the coins in cold wallets, and then we manage the hot wallet in the proper manner. So I think custodian will always be an issue, but we'd love to see how the other panelists are addressing this.
Yeah, I think that cold storage is definitely one of the solutions to keep most of the customers' assets. However, even if you do that, you still need to have a hot wallet online with the private keys stored online in order to do the quick transfers for the clients, which provides a great user experience. And the recent hacks that we witnessed, I think they teach us something. And we then can learn best practices and bring best things which are out there. So, for example, we can use the as what we are going to do and doing with the Covesting is hardware these HSM models with the cloud HSM, for example, with Amazon, where you have two-factor authentication directly communicating with Bolos engine with the HSM, and then the same model HSM challenges the business logic first, and then challenges the end user to confirm with his physical device, for example, with Google Auth on the phone. So it becomes really then hard to hack even hot wallet. It means that you need to compromise the internal infrastructure of the exchange. You need to compromise the keys from the HSM model in your cloud, and then you need to get hold hold of the physical device of an end user. So it becomes almost impossible to do that. And apart from that, I think it's not only a matter of hacks, but also it's really important to have proper internal controls in every company. It's how the whole corporate governance is managed, how the internal risk controls are handled, how the human factors are managed, and things like that. So I think as regulations are starting to kick in, the more serious controls and supervision is going on for every single exchange, and this will definitely improve the security of the future exchanges. That's for sure.
Yeah, so as a disclaimer, I lost my money in Mt. Gox, then I lost my money in a Cryptus, and then I lost my money in a Bitfinex. So I don't trust anything that's a hot wallet. So the solution to this problem is not to give the money to exchanges at all and have a non-custodian solution. It's very slow. We can do settlements in a blockchain, but the whole value promise of blockchain is trustless self-sovereignty. So trusting those exchanges in the first place is a mistake, and we have today technology to build solutions that we don't give money exchange, but we are still trading with exchanges. It's slow, but next 2 years it will be the future because it's getting faster and faster every day.
You've had some really bad luck. I think it's important to recognize that this is not just a standard IT security problem. The industry doesn't suffer from this problem because we don't have enough financial technicians coming from mainstream banks. They're not out there. The security professionals at banks don't have experience dealing with digital bearer assets, which is what crypto is on your servers, and on the hardware wallets, on the hot wallets, on the cold wallets. You can't just pull people out from the security industry and throw money at the problem because it's a new problem. I equate it to like leaving a pile of 100 euro notes on a coffee table at a party. Of course, people are going to try to take that, and that's what this problem is like for for the crypto exchanges and for the companies that operate in the Bitcoin economy. Even the online casinos have the same issues. The Bitcoin online casinos have the same issues as the Bitcoin exchanges. So the state of the art right now in the industry is to go multi-sig. We saw that validated when Bitstamp migrated over to full multi-sig accounts, employed BitGo to do that. And if you're not using some kind of multi-sig implementation, you're behind the times. I think what we're going to see as a next evolution in the space for the centralized exchanges, I'm not talking about the decentralized exchanges, but with the centralized exchanges, we're going to start to see advancements even on multi-sig. The next advancement there is something called threshold signatures. There was a paper a year and a half ago out of Princeton University that actually demoed this with one of the exchanges. So it's a lot more significant than multi-sig, because what it allows you to do is create a threshold of about even 40, 50, 60 different signatures that you need to move coins. And you could structure that as a board, you could structure it as a different body, but it's not simple multi-sig where it's M of N. You actually have to reach a threshold. And with threshold signatures, you can then introduce wallets and exchanges where the exchange owners themselves wouldn't have access 100% to the assets, and then they can be more trusted that way because you don't have to worry about the inside jobs. And the embezzlement really is the main security risk at exchanges. Even though exchanges won't say that, the reason it's the main risk is because an embezzlement could actually be occurring, and they could claim that it was an external hack, and nobody else would be able to prove otherwise.
Okay, as a investor in many of the exchanges, I'm seeing a lot of the strategies around where people think that this is going next. So we're seeing exchanges that are looking at their traditional centralized model, and they're also diversifying into decentralized exchanges, and then they're also applying for license for securities exchanges. Where do you think it's going? Which ones going to be the place where all this volume is going to go?
I think decentralization, centralization, it's going to be a constant debate. The original Bitcoin community is all about fairness, decentralization. So essentially, there's a proposal and then proposition for the decentralized exchange. But the thing is, when you're talking about centralization or decentralization, you obviously sacrifice something, because if you want centralization, you have efficiency, you got cost savings, you got better monitoring, better speed of delivery. But at the same time, you lose security. So you want security, fairness, then you have to go decentralized. So the three things cannot exist together. Right? Security, efficiency, and centralization. It just does not exist together. So it's which give and take, which area you want to focus. And I think at this point in time, centralized exchange provides the efficiency, because the mass market out there still really don't care about the philosophy behind the exchange. They say as long as I can see my money in the account, I can have those high liquidity. I don't care, as long as I know who is running the exchange, who I can sue. Then I think centralized exchange so far provides that benefit, but love to hear the other side of the story.
I agree that at the moment, if we talk about exchanges like today, the centralized model definitely offers much more opportunities. You can do various crosses, you can add additional products, you can do derivatives on that, you can do options on that, you can do marginal, for example, trading on that. You can execute tens and thousands of transactions per second in there, and you can build a full infrastructure. However, I think if we talk about future, of course, the centralized model has to prove itself first that it can handle a significant amount of transactions. But I think offering, let's say, hybrid, or for example, a solution where a person, when he opens an account with an exchange, and then he can choose himself whether he wants to have a model where he holds his keys himself, and then he doesn't need this high-frequency trading abilities, he doesn't need this API for executions, several transactions per second. He can go for the decentralized model, and if he wants to use the full infrastructure, then he needs to put some trust into the hands of an exchange where he has an account with, and then just give two options for each customer. I think that's more or less where we're heading.
Yeah, it's definitely today. It's centralized exchanges are way to go. First of all, most of the cryptocurrencies do not have enough decentralization features to be able to have a decentralized exchange. So as long as Bitcoin still kicks around, we are going to see centralized exchanges. But on the other hand, the current blockchain platform technologies, they are so slow. They are still so crappy. Like I run a small ICO and the whole Ethereum goes down. So it's definitely not yet there. But there is like silver lining around the cloud. We are already starting to see these new so-called 3.0 blockchains where you can have a throughput and stability to be able to deliver things in a truly decentralized manner.
Mm. Yeah, I think, Simon, I think we're a long way from decentralized exchanges taking off and being the predominant exchange at a number of years in the future at least. We'll start to see them like we all are now, but I think they'll be limited to smaller amounts, and we'll see the smaller volume, smaller value trades possibly migrate to decentralized. But I don't see anyone doing major trades, significant value, especially institutional trades that are doing $500,000 to $5 million worth of cryptocurrency. I don't see them using a decentralized exchange. So that means that in the near to medium term, centralized exchanges are going to still play a very important role. And I think they do play an important role, but more so because you need that type of an exchange configuration to properly short the market. The responsibility and the role of an exchange is to warehouse commodities, so that when you short something in the market, you actually have the commodity that you're shorting. So you're not doing a naked short. Centralized exchanges will play that role. And that's how it works with Bitcoin today. Bitcoin and Ethereum, if you want to short those, you have to go out in the market, you have to borrow them, and then you short them. Otherwise, you're just running a bucket shop like the CME and the CBOE where they're doing cash-settled futures. I can do cash-settled futures with you guys now. We can go down this room down here and we can place our bets on what the price is going to be in 1 hour. That's essentially what a cash-settled future is.
So speaking of cash-settled futures, 2017 saw CME create Bitcoin futures contracts. We saw SBI, one of the largest banks in Japan, talk about launching their own crypto exchange. We saw countless stock exchange saying that they're going to be going into blockchain initiatives. And we saw people like companies like Binance become more profitable in a quarter than Deutsche Bank, which was, I thought, a huge, tremendous win for the industry, and I was cheering on the side for that one. What's the future? Are we inevitably just going to be creating something that makes the banks richer? Are we going to be gobbled up by banks and financial institutions and regulations? Or are we actually going to create something here that makes them less significant in the future?
Here, I'll start on this side over here. No, I don't think that futures and derivatives are a negative for the industry. I also don't think that they're just pointing us into the existing mainstream legacy world. You know, futures and options derivative products will evolve within a free market. So it's entirely natural for them to evolve. What's not natural is when you have exchanges that are co-opted and manipulated that allow naked shorting. This is one of the problems with the silver market in COMEX today, is that there's too many naked shorts. So if you can, the solution to this, the remedy to this, I think, in Bitcoin land, because this is one of the things that keeps me up late at night more than the 51% attack, is I'm worried about naked short selling underwritten by state actors that can actually co-opt a significant number of exchanges. So the remedy to this is to have a lot of multi-jurisdictional exchanges so that one exchange jurisdiction cannot control the entire market for that trading pair, because then it would be the tail wagging the dog. So I think the evolution we're going to see as we move forward is jurisdictionless exchanges. We'll see exchanges that are operating only in the cloud, and they'll be 100% jurisdictionless, which will not put them under the regulatory scheme of any single jurisdiction.
I would personally think that in order for smart money to move into the market and to see more family offices and hedge funds participating in trading and stuff, we need really transparent and regulated, probably, infrastructures where you know that if you're putting someone else's money, as you're an asset manager and you want to execute a trade here or there, you want to know that there is some supervision going on, that there is some regulation going on, that the people behind this exchange are real people and they are responsible for running this business. And if it's, you know, a company registered in Belize with nominal directors and unknown real ownership, whom you're gonna put your claims against if something goes wrong? What happens if money, you know, will just disappear? That's it.
Well, let's take an alternative perspective on that. For those who've been around for a while, you'll know the most reliable exchange in the history of Bitcoin was BTCE. And BTCE was fully anonymous. No one knew who was behind it. And it was the only one that eventually it only got people lost their money because the FBI took it. So what does that tell us? Is it a good thing that Goldman Sachs now owns Poloniex? Is that going to create Poloniex into a great exchange via Circle? Or is there going to be another Satoshi Nakamoto that anonymously comes down and creates a decentralized exchange that takes out many of these problems?
I think ideally there would be, again, both scenarios. So it will be a customer for every exchange, whether you want to choose the one which is this, trustless, which is cloud-based, fully decentralized, or you want to go and follow, for example, best practices with a clear regulatory framework, with the clear guidelines, with the clear supervision, and then, if the exchange, for example, would be run from the very beginning in a transparent way, maybe there wouldn't be any problem with the FBI initially, right? So it still depends, but I think that institutional money and, again, family offices and all these assets under management are there. We still have a very little tiny bit which is currently participating in trading. And with these ICOs, with this crypto, it's a little bit different story if we compare with IPOs, because usually when talk about initial public offerings, usually Wall Street is in front of everyone. They're participating in that first, and then when it goes public, the whole crowd goes in and they can purchase a stock, for example. In this case, at the moment, no, because we're lacking with the clear regulatory frameworks and this clear infrastructure and transparency, and that's why we have a little bit of this wild, west, where normal people can go and participate in trading, and they can buy these tokens without very clear regulations, right? And the Wall Street and all the family offices firms, they lag behind. And once we have everything sorted, once it's going to be transparent, once it will be supervised with the clear guidelines and everything, I think it will bring a lot of new potential funds coming into the trading and investing.
Yeah, I have to agree with that, because I think, keep in mind that all the exchanges now, even though they're like billion-dollar trading volume daily, they still are a startup. So this industry is so new, so we're experiencing a lot of best practices. So the best practices actually are formulating right now. There's no, a blueprint for all the solutions. So I think we should encourage all kind of innovation happening in exchange, whether it be run by a government-backed startup, or it's just by some random guys anonymously doing decentralized exchange. I think we should encourage this kind of innovation. And we see in the past few weeks, you see this new thing called transmining on exchange, where the exchange, they normally take fees on your BTC or Ether, but they reimburse you with their own tokens. So it's actually it's like an ICO on exchange. And then that boosts up the volume of exchanges. All of a sudden, some unknown exchange have billion-dollar trading volumes, because I think the trade bots are trying to create those transactions so they can get those free coins. I mean, it's probably not sustainable, but it's a really creative innovation, right? So we can learn from a lot of those things, and then we can say, okay, maybe we can try this, maybe we can try that. I think this is such an exciting space to explore. Possibility is limitless, but we can't predict the future, but we know the future is bright.
Yeah. So the most important, it doesn't matter if the world will move more towards decentralized or centralized. It's important to build up trust, so people will understand that their funds are safe, that there are best practices in there. There are people, real people behind that, because only by doing so, and only by creating such ecosystem, there will be, trust level going up, and more people will be interested in participating, because we hear a lot of hacks and no one wants to have, their funds stolen from the wallet. So this is something that has to be addressed first.
I think Mikko had an account with BTCE. Yeah. Or is that the only one you missed?
Yeah. I can't talk about it because it could have some consequences for that.
I always wondered, where is all that money from Silk Road going? Totally makes sense. One word answer. Are regulators going to stop exchanges getting hacked? One word answer.
It depends.
2 words.
Okay.
No.
Regulators can't stop exchanges get hacked, but one thing I think they could do, at least favor for me, that they could try to catch these market manipulation attempts, or especially slippage cost orders. So when you place a market order and you are not actually delivered, but you think delivered because the half of the order book is fake. So I hope that the regulators could tackle that problem, because that's the only way to do it. So that having somebody with the authority and transparency to operations to check that the trades that have been done according by the book.
That's 428 word answer.
Okay, one word answer is no. Regulators are not leaders.
Okay. Is the answer to all of this to shoehorn these exchanges into securities laws? Or is it to treat it as a money service operator and shoehorn it into money laws? Or do we need custom, built for purpose, digital asset regulations?
If I may, I think that it has to be also like a hybrid of it. So we could take best practices from traditional financial markets by bringing this, again, transparency, supervision, and everything that makes these ecosystems safe and secure for trading. However, we cannot say that it's going to be absolutely the same thing, because it needs to have the digital assets need to have this separate, like, what do you call it, instance, right? It has to be still, it's different. It doesn't represent ownership the same way as securities do. They don't trade exactly the same as they do. It's basically a digital, it's a code, it's something else. So I think it has to just, by bringing the best practices in terms of how exchanges should operate to be safe and transparent, this is a good thing to take. But however, the rest of the regulations have to be customly, I think, adopted and adjusted towards digital assets separately.
Yeah, I think we are having some blockchain features that can't be addressed by current regulation. For example, to be a trustless and self-sovereign in the first place, we can't do what they do in the current financial system, that you can just reverse transactions when you mess up. So that's the cause of the crypto exchange hacks, because transactions are irreversible. So you can very easily have a liquid stolen assets and get away with it. So current regulation doesn't address any of those problems. So we need to start talking about things. Okay, there are addresses, are there people behind those addresses, and so on. So it's not a completely a new regulation, but we need to address still the part of the system that are global, scalable, and so on, to make sure that everybody is on the same page.
Actually, I think that that's solved more with technology than with regulation. So I think we can get to the same place with just solving it with technology. Because I don't think we need any new crypto-specific regulations. That would be detrimental for the industry, where the industry is already so well covered by the existing money service business regulations, not the security regulations. But with money service business regulations, if you try to open an account at one of these exchanges, you have to go through just as much as you would opening a normal bank account, probably even more, with the amount of identification and KYC, AML compliance that you have to go through. So we don't need crypto-specific regulation. The regulators just need to look at enforcing the current regulation that's out there, in my opinion.
Speaking of enforcing current regulation, a representative of the SEC recently stated that Ethereum is not a security. If you read between the lines, he did say that it was a security when it was sold, but they're just ignoring that because it's sufficiently decentralized right now. Do you agree? Is Ethereum a security, or is it not a security today? And if it was a security, what would have happened to the market?
Well, I think people may be paying too much attention of what regulator says, because I think we all know that Ethereum is not a security. And by adding the definition from SEC doesn't make it a security or utility. It really is just not, it's a platform, it's a smart contract platform. And I think a lot of us, we need to be more confident in terms of we're building this industry. Actually, we know more than the regulators. So we should be able to educate them instead of letting them tell us what to do. We should be more actively showing that this is actually what it is. But again, we have to kind of respect the regulation, because they want market stability, right? So in my view, I think if the regulators are willing to work with us, of course, we can always kind of craft out these best practices, but I don't think Ethereum is a security.
Yeah, I think Ethereum was very, very lucky that they snuck through as not being a security. I don't think anyone else after this will be quite as lucky as Ethereum. But I also don't think that they're sufficiently decentralized. So I don't think that's a valid premise. There could be another episode like the DAO hacker, and we'll see another fork with Ethereum. It'll be Ethereum.
They're lobbying for parity now, aren't they?
Ethereum Classic.
Yeah. Okay, I think that's reaching towards the end. Have we got a bit more time? I can't see you there.
One more question or Q&A.
Okay, we're just going to do one more. Let's end on something a bit more fun than exchange hacks and regulations. And maybe it isn't fun, actually, because we're currently probably 75% down on the year with Bitcoin, 80% down with Ethereum. Where are we going next?
As I think that if we just look into the value of the cryptocurrencies and compare it to some other assets as for the value storage, for example, as a gold, something that Winkelhoff's twin said, right? I really follow that one, and it seconds my opinion as well. So I believe that cryptocurrencies bring a lot of positive things to store value. It's more scarce. It's, for example, Bitcoin, right? It has limited supply. It brings a lot of things for that. But again, once we see proper infrastructures and ecosystems and safe environment to trade, I believe that a lot of smart money, so-called, would enter the market, and I would see that this would affect positively the trends. And also, I think that within time, this correlation will disappear. Because at the moment, wherever Bitcoin moves, all other altcoins and all other coins move the same direction. This should not be the same way. Same thing as in as in the stock market. Every currency is individual. Some of them have better futures than the other. Some are more scalable. Some are not. Some are more like a currency. Some more like an asset. So it has to change within time. And I think we're just in a very still early days of the whole cycle. And sometimes I also see that there's pure manipulation happening on the market, which I really hope will be eliminated within years. And once that all happens, I think that the market will become more healthy. And I still believe that the trend will be upwards rather than downside.
So
Jon, you've seen $30 to $3, 1,300 to 250.
So if we just
20,000 to 1,000, where are we going? Where's the end of this market?
I think we can reach new highs, but it will not be as instant as it happened, for example, in December or in January, right? It's because previously it was more like a hype-driven. It was like when a lot of people were rushing, and if you look in the perspective of an order book, basically, a lot of people are just taking asks. It doesn't matter how much it costs. They were just wanting to buy and not to miss the opportunity. While now they saw the crash, and a lot of people basically lost their money. So I think if the market will go forward and with the upward trend, it will be more kind of stable rather than quick and instant.
I hope not stable.
Yeah,
We've never seen stable in
Yeah,
crypto.
who wants to invest in stablecoin?
Yeah.
That would be a very boring investment.
Actually, Tether's the only non-speculative cryptocurrency out there.
I think actually
It's just always a
stablecoin
dollar.
is something that has to be looked at as well, because at the moment we don't see any government-backed stablecoin where people would be sure that okay, this stablecoin will be pegged 1-to-1, and I'll be able to exchange it to, let's say, a British pound or euro 1-to-1 with the government's guarantee. As soon as that will be
But
implemented,
the government's guarantee, come on, they said that gold was backed by dollars, didn't they? Once upon a time.
no, true.
John,
So,
where do you see it going? You've seen a lot of markets.
I see return to the new highs within the next 12 to 18 months. I think a lot of the selling pressure that we've seen is from Mt. Gox selling. There's definitely Mt. Gox selling, and they're selling in the OTC market that gets pushed into retail. But think about it this way, though. I mean, we wouldn't be as worried about the price where it is now if the market didn't overshoot so much. So markets have a tendency to overshoot on the upside, they overshoot on the downside. if this had been a slow, steady march from 600 to 6,000, everybody would be, everybody would be wetting their pants with excitement because it would be 6,000. But because it went through the volatility of overshooting, it looks really scary to everyone. So it's only been like 12 months so far. So we have to look at it in a different way.
Absolutely. Yeah. I mean, if any of your stocks had performed like Bitcoin had in the last year, you'd be over the moon. Any final comments just before we end?
I think we keep a long-term perspective. I think we're going to the moon. So we have to be patient.
I agree.
Yeah.
Okay. Thank you. Thanks everybody.